Young parents. This is who life insurance is actually for. If you have young kids and people depend on your income, life insurance isn't optional. It's responsibility. I've worked inside this industry for years, and I've helped thousands of families put coverage in place the right way. And I'll tell you this clearly, life insurance isn't about you. It's about what happens to your kids if you're not here. If you're 30 years old making $80,000 a year with 2 young kids and a mortgage, your income is the engine of that household. Without it, everything changes. Now here's the part most people don't realize. Coverage is usually way more affordable than they expect. A healthy 30-year-old can often get $500,000 in term coverage for somewhere around $20 to $30 per month. Even $1 million might land in the $35 to $50 per month range depending on health. That's not an investment. That's protection. And I work with a carrier I trust that offers up to $1 million in coverage, which for a lot of young families creates a strong financial safety net during the most vulnerable years. If you want to see what it would cost for your age and health, there's a free quote tool linked on my page. It's quick, real pricing, no pressure. If this kind of straight talk helps, like and follow. I'm on your side. So how much life insurance does a young parent actually need? Forget the generic 10 times income rule for a second. Let's look at logic. If your family needs $70,000 per year to function and you want 15 years of protection while the kids grow up, that's just over $1 million in income replacement. Add in a $300,000 mortgage, and suddenly you can see how quickly the numbers move. Now, does that mean everyone needs more than $1 million? Not necessarily. For many young families, $750,000 to $1 million properly structured covers the mortgage, replaces income during the key child-raising years, and gives breathing room. The key is matching coverage to the risk window. You don't need something fancy. You need something solid. And here's what I've seen after helping thousands of families. The biggest mistake isn't having the wrong amount. It's waiting too long and locking in higher rates later. If you want to see what $500,000 versus $1 million would run you monthly, check the free quote tool on my page. It's from a carrier I personally trust. And if you like having an insider who actually explains the math instead of scaring you into a policy, like and follow. Here's what the industry doesn't emphasize enough. Life insurance for young parents is temporary protection. It's there to protect your kids while they're dependent on you. In your 30s and 40s, your biggest asset isn't your savings, it's your future earning power. That's what you're insuring. As you build investments, pay down the house, and grow retirement accounts, your need for coverage shrinks. Eventually, you become self-insured. That's the path. For a lot of families, a clean $1 million term policy during those peak dependency years is exactly what makes sense. Not overcomplicated, not overfunded, just responsible protection. If you want to see what that would cost you, real numbers, the free quote tool on my page is from a carrier I trust. Run it. Educate yourself. And if you appreciate someone inside the industry who's actually on your side, like and follow. I'm here to make this simple.